Fam. Hope everybody had a phenomenal weekend and a great Monday. So I did not have opportunity to trade at all today. First time in a while that I really couldn't even look at the charts. I didn't even open my trading view up until late in the afternoon. But still want to go through a recap. It's a little bit of a hindsight because I didn't take any of these trades, but we can definitely see where they would have come into play. First off, we've been talking about this range expansion that we've had it for a few times. So if I look at what happened from the Asian to London to New York, you see that we actually had a another range expansion model. So it's just a hint of what could possibly happen in the market. You can use that as kind of a way to kind of identify your bias and all that kind of stuff. All right. Okay, so let's jump into New York here. Okay, and what'll be cool about this one is because I really didn't take any of these trades. I'm just going to go through this how I would have taken it. With the DR or anything else I would have used. All right, so this one actually might be a little fun. Let's see. Okay, so we go in, and what was our range today? We had 45, 68, let's say 69 to 86, 87. So it's at 18 points. All right, so all right, pretty good, right inside of our 16 to 20 plus range. All right, and let's see what happens today. Now we didn't get a kind of a straight up or straight down move for DR. So we went up and we came down and we went back up again. So that's a little bit more. I'm not pulling a bias off of that. So at this point I'm neutral, right? I'm not gonna make any advanced trades, so to speak, based off of that bias because I really don't have one. Fair value gap formed here. But I noticed that we never actually came back and touched it. So nothing to see there. And I mean, if you look at this, what number is this? Let me see. Wow, this is interesting. If I follow this line all the way across, like you literally had that 45.79, 45.80, like 45.79 was kind of our kind of line in the sand today. We really use that as a support mechanism for our for price. So we tested it quite a few times and didn't actually go below it. So interesting. Okay, let's go DR now. So we form at 1030. We tested up here on the. We tested the IDR, didn't break through it. We test IDR here, didn't break through that either. Well, we went through it, we wicked through it, but we didn't close in between. So again, it's not a identifier for me. Here we actually closed inside of DR or inside of IDR and DR. So that lets me know that potentially we're intended to go higher today. Right, that's the intention of the market or based off the DR strategy. All right, so we finally close above DR here, and then we immediately retrace. Okay, nice retrace there. We didn't retrace down to the 0.5 fib, which was right down here, which would have been a nice indicator for us. So now here's where it gets interesting or tricky, because if you're aggressive, you can take a trade, let's say on this green candle here. Once that red candle kind of moves back up, you could take that trade on that green candle. And this was I don't know the points on that one. Let me see if I can tell you real quick. That would have been, let's say, 81 to 87. So that's about 6 points that we could have gotten there. Now, if I took the trade off of if I'm being a little more cautious, and I take it off of here on the IDR high, so now I'm at 84.50 up to 88. So that's still a nice 4 point lead. So that's still a nice profit if you're trading on the minis, right? Okay, so that's the first trade we probably would have taken. And then we come down and we test again. Let's see, we tested that a few times. Not a lot going on here. Nice, another retracement here, which you could have done basically the same trade, that same 4 point trade from here. Oops, sorry. So same 4 point trade from here to here, roughly. All right. So that's another again. So we're scalping, right? We're not even in looking for a run. We're just trying to scalp it. Okay. So another retrace. So here's, probably the safe trade of the day. Uh, Now here's the thing, right? You see all these candles are inside of, or they're, inside of the IDR, right? There's going up and down on the IDR. So, this is where patience comes in, right? And this is the thing about DR. You gotta have some patience, because here's what would have happened. So let's say price comes down, or let's say I take price here, right? I take the trade here, okay? Price goes up 4 points. If I'm not set, if I'm trying to do a set and forget it, where I'm just, I'm gonna take 5 points or nothing, I would not have gotten my profit target up here, right? Because it didn't get there. So I would let it come all the way down and then come back up. And so what you got to think about is, where's my stop loss? Okay, if I'm here, right, and that's let's say 45.85. Let's say my stop loss is down here at 45.80. All right, so you gotta have the patience there to say, am I willing to follow the rules and stick with the plan, and understand that price, may go up and down. If I'm not scalping, if I'm trying to just wait for the run, is that something I can tolerate, right? That's the hardest part about this whole thing, is just that, what's your risk management look like? How comfortable you are with the drawdown. Like I said, mine is always, the max I always do is 5 points. Once I get below 5 points, I'm out. Right. I don't, after that, I can just get back in or do something different. Right. But, so that's something you always got to think about. It's like, what's your risk tolerance? If your risk tolerance is only 2 points, then you'd have gotten stopped out. Right. You'd probably been right here. All right. If your risk tolerance is 10 points, I wouldn't encourage that, but you'd be down here somewhere. You're never in bad shape. All right. You're never out of the trade. So anyway, so at some point, we get in here on this IDR high, and then now, we can follow this trade up till 2 p.m. and that goes up here. So now I'm at that 45.85 to 45.92, let's say. So that's probably a good 7 points. Okay, so nice trade there. All right, and so, oops, sorry guys. Okay, so that would kind of been the DR trade for today, right? That would have been the one that would have been the safest, but again, you had to get there, right? You had to get through all this other stuff, you had to get through all this stuff to get over here for that move. But again, there's opportunities in here also, right? These are not bad trades. They just didn't move as much as you want them to. Okay, and so we kind of had that consolidation day, if you think about it. And once we have that day, then it's just one of those things where you got to kind of adjust your strategy or the way you approach the market to accommodate that day. One interesting one here, I just saw it, and again, this is a DR video, but there's a really nice ICT, probably 2022 mentorship model, if you guys are familiar with that, right up in here where we come up, because if I took the line out, but we had the buy side liquidity from Friday's high. It got taken out on this candle, right? Then you see some down, and we got some market structure shifts and some other things happening. Fair value gap forms, price comes down, comes back up, test the fair value gap, boom, really nice trade. All right, so that's another one where you're probably at 85 down to 76 almost. So if you're doing ICT, then you were pretty happy with that trade. All right. So anyway, but that was the day. Again, wasn't a gangbusters kind of day. We didn't move 30, 40, 50 points, but there were opportunities there for you to take advantage of the market. And again, hopefully you did. I know we have some news coming up to this week. We got FOMC, I believe, on Wednesday, and we're actually in earnings season. So, head on the swivel, keep to your rules, and, trust the process. All right. God bless. Love on your family. You never know when you might be able to do that again. So take advantage of it. And we will see you guys on the next one. Take care.